Hola, ladies and gentlemen. This is Farouk here speaking for another edition of How to Trade Binary Options slash Forex. Now, first of all, I wanted to thank you all for the patience that you have. I know everybody's trying to make a buck, and you're trying to learn how to trade binary options. Now, I've been away for a while now, at least a couple of weeks. And I have taken 60-second trades just to test out my old strategies, and it has gone well. I did a example video where I took 1 hour worth of trades, and in that video I made about $70 that for that 1 hour. But I was being super conservative. I wasn't taking a lot of trades. I was just making sure they're profitable trades. But today, excuse me, I do have a little cough, so. Today, I don't want to go through 60 seconds yet because 60 seconds is not my primary strategy. In fact, I don't even trade 60 seconds anymore. It is a little risky. It is kind of like gambling, but if you have a solid strategy, then you will make some money with it. And I will take you through that once I take you through my main indicator. As you can see here, it is the Stochastic Oscillator. Now this thing, I love the Stochastic. It's not 100% all the time. It doesn't work on trending markets, but it does work when you combine it with price action. So today I'm going to take you through, as quick as possible, I guess, how to use the Stochastic in timing your trades and to place trades and to confirm your trades, just to be safe. So first of all, I wanted to bring up this whole thing on Facebook, all this beef that's going on Facebook. Some of you may not know what I'm talking about, but some of you are in the same circles I am on Facebook with traders. And there's a lot of drama going on about this trading group doing this and charging this but not delivering, blah, blah, blah. Listen, I'm not charging a single penny. I'm going to teach you guys what they're teaching you, probably even better stuff. I've been doing this for longer than a lot of them have been, and some of the some of the teachings that they have is actually, you can find it online for free. Don't let screenshots, beautifully laid out screenshots, kind of sway you into thinking, okay, I need to pay this person $500,000 to learn what that person is doing. There are geniuses in the market here that make money with this, that don't go on Facebook like us and don't teach people. And if they do teach people, they charge thousands of dollars. So trust me, whatever someone's telling you on Facebook that they can teach you this, this, and this, and they'll make you this much money, like a shitload of money, is probably not true. So just take that with a grain of salt, and just know that I'm not charging you guys anything. I'm doing this for free, so there's nothing you really need to lose from listening to what I have to say. I'm trying to teach people because I know the struggle, and I hope everybody benefits from this. Now, one day in the future, I might charge for personal coaching, one-on-one coaching, but I haven't decided whether that's something I want to do. I kind of just like trading and making videos for you guys. So that being said, as you can see in front of you, a good setup is probably occurring, but I'm not going to do anything about it. I'm just watching the markets, and I want to just shoot a video, so I'm not going to be doing any trading today. So that being said, I'm going to take a random pair that I think is moving well, and I always most of the time use the 5-minute charts to start looking for my trades. So I think the USD JPY has been moving quite well, so I can use this as an example. So wow, I wasn't planning on editing this, and I still probably won't edit it, but I just sneezed in your guys' face. Anyways, let's start here. So I drew a couple of lines from earlier earlier on in the morning, but I'm going to remove all these lines. Now this is MT4. I use both MT4 and Thinkorswim. I don't like getting used to one or the other, so I always switch it up. But for now, I'm going to use MT4. Now, to add the Stochastic, you should already know how to add studies in Thinkorswim. If you don't, then just ask on the Learn Binary Options group, and someone will answer for you. If you are using MT4, then what you want to do is you just want to go to the indicators, and you want to add Stochastic Oscillator. Okay, when you do that, you're gonna get this window here. Okay, let me just. You're gonna get this window here. Okay. Now you want to allow DLL imports, and for inputs, it's gonna say 533. And in Thinkorswim, it's just gonna have two numbers. It's gonna have either, I think it's gonna be about 12 and 3, or 5 or 3, or 10 or 3, or something like that. You want to change that K period to 12 or 14, and the D period, and if you have a slowing there, to 3 and 3. And then you press OK, and then you move forward from there. So what the stochastic does, for people who don't know, is shows you overbought and oversold conditions. So this line over here represents 20, and this line represents 80. If it's over that line, it generally represents overbought conditions. And when it says overbought, it means that a lot of people have bought, and it's likely that the price is going to start going down. However, remember, it's not necessarily the case in trending markets. It doesn't work in trending markets all the time. So what you want to do is you want to be very careful where you place your trades, and if it's a trending market, you want to be even more careful when you place those trades. Take obvious trades. You do not need to trade 10 times a day. Trade 2 or 3 good trades every single day from any pair that you see, and you can really compound your earnings and make a lot of money. So let me show you an example of how we can go about doing this. So now that we have the stochastics lined up, what we're going to do is we're going to start putting our support and resistance lines. So the day started off here. This is the day right here, and this is the 5-minute chart. So it goes up, and then you see that it kind of went down over here. So we're going to put a line of resistance right here. Okay, and we're still watching at this point. Okay, so it just keeps going, and then it broke that line over here. So remember, if this happened right here, at this point right here with this candle, you don't see that big candle yet. Oh man, this is why I didn't like MT4, because you can't kind of scroll properly. Anyways, at this point right here, you're waiting for it to see what the candle looks like as soon as it comes close to this line. So you're not making any trades, but as soon as you see this candle right here, you're getting ready to see if it touches this and bounces off. But then when this candle starts, it closes all the way up here, so it broke this line. So this line is a potential new area of support in the future. So what you want to do is you want to see where this goes up till, and then starts going down before you make a new resistance line. And remember, this over here is now the old support that may come into play sometime in the future. Just keep it in mind. I wouldn't draw this here because the price is way above it. It's not likely to come close anytime soon, and if it does start coming close, I will draw a line here to see where I could have opportunities there. So now we're trying to watch and see what happens. So it comes down, it kind of bounces off this line here, and as you can see, if you took this trade, and visualize what's happening with the stochastic at the same time, okay? So it breaks this line, and the stochastic shows a overbought condition, meaning the next couple of candles or next candle or so will probably go down. But remember, this could be trending, so you may not want to take the risk. Now, I personally wouldn't take the risk until I've established strong points of support and resistance. Now, if you look at the previous day, you saw that this was a point of resistance. Okay. Now, it could be that this price could be coming up to here and then bouncing off, but you don't know. You're waiting to see what happens, and you're watching the stochastics to see its behavior. And in this case, it came close to this line. It came very close, and it bounced back down. And as you can see with the stochastic, right at that point, it showed that it's overbought. And if you were at this point in time and it was overbought and it was coming close to this old resistance here, then you could have put a 30-minute trade for a put on the downside and won that. Okay, this would have been 5, 10, 15, 20, 25, 30. You would have easily won that trade. So then it breaks that old line of support, and it looks like it's going to start either ranging or trying to figure out what it wants to do. So now, because this line broke, this old support broke, we're going to get rid of this, and we're just going to use it to create a new line of support, the most recent line of support, which is here, and the new line of support, which is, resistance, which is about here. Okay, so now you're trying to see the behavior again. Now, when it came down here, you saw that when it came down here previously and it bounced up, it kind of created that level of support I was telling you about earlier. So when it was coming down this way, during this candle, you would have been watching it to see its behavior, to see how it reacts at this old line of support, and how the stochastics looks when that line of support hits. So remember, if it's about to hit support, the best time to take it is when it's at oversold conditions. When it hits a line of resistance, the best time to take it is if it hits a line of, overbought conditions. Now, so let's see what happens. See, it hits this line, old support here, and it shoots back up. And notice the stochastic beautifully oversold, thus confirming, the behavior right here. I wish I could scroll it properly, but at this candle, let's say this green candle hasn't happened yet. At this red little candle here, you saw a wick. And remember, the wicks are very, very powerful. The way the candles look, very, very, very powerful. And I'm going to take you through a couple of examples of what I mean by that today. Now remember, folks, I told you that you're going to have a very worthwhile session here, and I'm going to thank you for your patience by giving you something that you guys can really take to the market and implement it. But you really have to listen to what I say and watch this video again if you have to. Candles mixed with price action, meaning support and resistance, mixed with stochastics, can bring your average winning ratio up from whatever it is right now to at least 80 to 85% if you wanted to. Sometimes even above 90%. But you have to be very diligent in how you trade. So anyways, so as you can see, this red candle happened very close to support right here, and stochastics was oversold, and which means the combination of those three things, candle and the wick, stochastics being oversold, and it hitting a line of support, confirms that maybe you should take this trade to the upside. And if you did, you would have clearly won. So now we're watching the behavior here to see if it bounces up here or it continues upward. Okay, so now we're just watching the behavior and also watching how the stochastics move. Okay, so now it looks like it came close and it's bounced off close to that area. We wouldn't have taken a trade, but you're continuing to see where it's kind of maneuvering. Alright, so you're just watching and nothing's happening in the market right now, so you're just doing nothing. Okay, so right here, it comes close to this part again, and it kind of bounces off and it goes down again. Now, this is a 5-minute chart, and if you wanted to, you can go take a turbo trade for 5 minutes right when this candle closed for the downside for 5 minutes, and this obviously you would have won because it's a red candle. And it's close to the overbought conditions, meaning, and it's close to the resistance, meaning it would have confirmed your trade, and you would have been able to take a put option for 5 minutes, and you would have been won that trade. So there's two things we're talking about here: 15-minute trades or 30-minute trades, and 5-minute trades. And you can use different rationale to place all those trades, and I'm teaching you that all right now. For these trades, those big bounces, now remember, take a note of what the candles look like, how big the candles are when they're about to change directions. Look at that. Look at how big the candles are. See, when it came up here, it had a small green and it had a huge red, meaning it's probably going to come down, all right? Which it did. And in this case, you would want to take a 30 to 30 plus minute trade if you were trading it off of this confirmation right here. If you were trading it from here and it touched resistance, was it this resistance? You wouldn't take a trade here unless, because remember, this resistance wasn't established yet. So you wouldn't take a trade here, but you would probably take a trade right here because this was established as resistance. So moving forward, it goes down and then it shoots back up, so a new trend is about to form. Now as you can see, I'll show you, actually this is not a good example, but I want to show you an example of the stochastics not working when the trend occurs. So we're going to move this old point of resistance right here, and then this is the and this is the new support, okay, and then this is the new resistance. So let's see how the pricing behaves over there. So Actually, this is the new resistance. Remember, you're not doing anything here. You're trying to see the confirmation. So right here is a perfect example. See, this is the old resistance that you had, and remember the rule is that old resistance becomes new support. So now we're going to watch the behavior of everything. See, right at this candle right here, before this green candle occurred, if you saw this red candle here and you saw that it's kind of hovering and closing, and it's kind of hovering alongside this line here, then it would have been a good candidate for you to take a call option. However, if you're very strict in your rules like I am, then you would want to be able to confirm your trade with this stochastic being under the 20. And in this case, it wasn't under the 20. So for the strict people out there, you wouldn't have taken this trade. But for other confident, more experienced traders, you've been good to take this trade because of the way the candle looks and because it's close to an old resistance or new support, potential new support. And you could have taken either a 5-minute trade, or in this case, even a 10-minute or 15 or 30-minute trade, and still won in the money. So now we're watching to see what happens to this candle. So far we've had about 1, 2, potentially 3, 4 trades so far, and it's been about 7 hours. So it's a long time for 5 trades, but I mean, you could do the math depending on how much you invest in each trade, that you have the amount of money you could have made already in a day. So this continues, and let's see what happens here. So it kind of bounces off, but it breaks this. So see, I'm very strict in how I do my trading. So if it broke it even a little bit, I would be hesitant in taking the trade. And remember, the stochastics isn't under the 20, so you would just be watching still as to what's happening. So you see right here, this candle closes close to this old resistance, but not quite. So I know that this next candle could come up here and could close close to this. So I wouldn't take a trade unless it closed very close to this resistance points and the stochastic was above the 80 point. See here, the stochastic was over the 80, which makes you confirm one of 3 things: that the stochastic is over the 80. That's one of 3 confirmations. The second confirmation is how the candle looks. Is there a big wick or not? In this case, there is, but it closed where it opened, so it's still somewhat of a risky trade for me. I would wait till the next candle to see what it looks like. Even if I have to lose even if I lose the chance to take the trade, I would lose it. I don't like losing my money instead. So I would have waited to see where this is going. And the third confirmation is if it's close to a resistance point. So let's see what happens. See, it closed very close. So if I took a 5-minute option there for a put, I would have lost that. But if you had taken a 15-minute put option here, which I recommend with 5 minutes charts, by the way, is take 15-minute plus trades, then you would have obviously been in the money. Especially right here, it's confirming 3 things. Remember, number 1, actually 2 out of 3 things. Number 1, stochastics is above 80 at this point. Number 2, it's right at resistance. Okay, and the third thing is the candle would have a big wick, and if it did, it would have been 100% I would have taken the trade. However, in this case, this is a reversal. This is a reverse candle, and in this case, there are places that say these kind of candles mean there is somewhat of a reversal, but I would not trust that. Number 3, but I probably still would have taken the trade if 2 of my 3 entry points, meaning stochastic and the resistance line, was strong enough for me to take that put option. And in this case, if you had, you would have been in the money. But remember, see that long wick? Instead of here, it came here. See that? That's beautiful. Because then, if you had waited for this, if you didn't take it here because you weren't confident whether it's going to reverse or not, you could have waited for this candle to close and taken a 15-minute trade, and you would have been in the money. So then, see, it just continues bouncing off here. Remember, you see another nice little wick there. Okay, it went up, so you have to visualize in real time what's happening with this candle to make this wick. What's happening is the oops. I don't want to give anything away here. Oops, where was I? I think I was here. Okay, so I was here. What's happening is I'm going to zoom it in for a little bit so I can show you guys. Where was I? I hate when this happens. I think it was here. Okay, so what's happening here is the price opens up right here in this red candle, and it hovers back and forth until it goes all the way up here, meaning the bulls, people that are buying, but the sellers in the market are predominant. So then it pushes the price all the way down, pushing out all the people who were buying, and bring in all the people that are selling, and ends up closing the price here, meaning the sellers are more prevalent in the market, meaning that it's more likely that this price will go down if there's a big wick. Okay, at least in the next, if it's a 5 minute, at least in the next 5 to 30 minutes, it will be going down. Okay, and in this case, it did do just that. And look at this again. This opened where it closed, so this is a reverse cross. Now, this open closed in the same place, and there was a long wick right at the point of resistance, and it went down. Okay, and you're starting to see my point. Let me zoom this out again. No, I forgot where I was again. I think I was right here. Okay, so it bounces off here where there's no support, so we're creating another support. We'll use this line right here to create this support. We'll get rid of this because this is not, this was broken, and then now we're just using the main resistance and the main support. So let's see what happens as the price gets to this location. Okay, as you can see, it completely, now it looks like it's going to trend upwards. So as you can see, this point right here, the stochastics was over the 80, meaning that in any case you would have taken a put call, right? A put option right there. Also, it's hitting a point of resistance, okay? Meaning 2 of your 3 things are confirmed. However, which candle would you take that trade in? Would you take it on this long green candle? Would you wait for this red candle to form, or would you wait for the next candle? Because remember, both prices closed a little relatively far away from that line over there. Okay, so it's not very confident that you should be taking this trade. But if it closed close to that line and it had a wick, then it would be a really good trade to take. But in this case, that was not the case. So it breaks, so it breaks that line and it's creating a new high. So now we're going to look for this being our new support, and we're going to take this line right here and we're going to put it at resistance. Okay? Now let's just watch it and see the price behavior. So see here, it's kind of close to the overbought conditions, but you don't know if the trend is over yet. Okay? So you're still watching it at this point. And actually, I take that back. I said that way too fast, and the reason why is because at this point in time, during this green candle right here, you would have seen where it closed, and you would have seen that long wick, and the fact that it was close to 80, and it was a resistance. Pretty much all 3 of your conditions are met for you to take a put option, and in that case, you would have won. And I spoke too soon because I didn't realize the wick was there. Okay. And I said earlier that you haven't confirmed that this is a strong point of resistance, that you don't know whether it's going to move up or not, and that's true. However, if 3 of your conditions are being met, wick, close or above 80, and point of resistance, then you should follow your rules and take the trade. And in this case, it would have been a successful one. So there you go again. It hits the old point of resistance. Okay, so you have a big candle and it's over 20, under 20, and it's hitting a support. So it's a strong candidate for a call option, and you would have been in the money. If you had taken it right here, you would have been in the money for a 5 minute and even a 15 or 30 minute as well. See over here, you have another long wick. You have another long wick, and it bounces up. Okay, so take these wicks at points of resistance and supports as bounces, all right, as ricochet. As imagine throwing a ball. The faster you throw a ball against something, the faster it will bounce back. Okay, so the wick is the speed at which you're throwing it. So the longer the wick, that means the faster it'll come back down. Okay, not all the time. Remember, nothing is 100% in the forex market, but this is all about ratios and probability of winning. If you're winning 60% of the time, you're still in profit. However, if you're winning 85 to 90% of the time, hey, you're making great money. So let's continue and see what happens. We're still now we've established support and resistance. We're either waiting to see what happens around those lines, or we're waiting to see what happens if it breaks those lines. Okay, so let's just keep watching and see what happens. Now it's just kind of ranging right now, so you're not really doing anything. So now see here, excuse me, you had a relatively large wick, and it didn't close to this point right here. But 2 of your conditions out of 3 are being met. Stochastic is under 20 or close to 20. It is hitting a line of old support. But the only thing is, this closing price was not close to this part right here. So it is a subjective decision that you have to make whether you want to take this trade at this point. You have 5 minutes to figure that out. Okay? But at the close of this candle, you don't have that much time. You have to figure it out early. You got to figure it out fast. So in this case, if you're taking a 5-minute trade, you would have been in the money. But if you had taken if this is the second or third bounce, then I usually would take a 5-minute or 15-minute trade. If it's a major bounce that it bounced off majorly from before that, like this one, see it bounced off major. It was a big downturn. And here I would have taken a 15, 30. I would have taken multiple trades here because I knew it would have gone down here as well. But here it's subjective, and obviously you would have won it if you had taken it. And let's just continue to see what happens. So see here, there's a long wick, but the price closed far away from this line. So at this point in time, just picture it. I'm trying to get this green candle. Okay. This opened right here. It hovered back and forth, and it went all the way up here and created a long wick. However, it closed well below this resistance line. So the next candle, just to get you thinking, could be another green candle to close right here. So you wouldn't have taken a put trade here. You wouldn't have wanted to take a put trade here. It could have been another green candle closing up here. You never know. So it's a long wick, yes, but it closed very far away from that resistance. So you wouldn't have taken that trade. And the stochastic doesn't match. So only one of your conditions are matching, which is the long wick, but still that condition doesn't meet because the condition is a long wick with it closing close to resistance and support. Like this one, like this one, like this one, so on and so forth. Anyways, let's proceed. So what happened there? So it broke that line of resistance and it's creating new highs. So as you can see, it's creating another high for the stochastic as well. So now you're going to keep this as the old resistance and the new support, and you're going to move this up here. All right. And then you're going to watch its behavior to see what happens at this point. So you're just watching it. I'm trying to scroll as close. Okay. So right here, what you see is it closed relatively far away from this right here, and it didn't meet this guideline. However, it met 1.5 of the 3 scenarios. Okay. It met the scenario where it met the rule of it being by the resistance. It met the wick rule, which is the half, because it didn't close close to this line right here. So if you're very strict in 2 out of your 3 at least being true, 2 out of your 3 rules being true, then you wouldn't have taken this trade. However, if you had taken this trade, you would have won. So sorry, this right here looks like it's the new point of resistance. Sorry, new point of support. As you can see, it went up here, bounced up, and it went back down here. So you could either put it at here, and you may have missed that trade, or you could put it at here. You could put both, but you have to see how the trade is looking at that point in time. So in here, you wouldn't have taken the trade because none except for one of your conditions are being met, which is the support line. And then again, you see a huge wick here, but it's closed very close. Far away from this support, so you wouldn't have done anything here. And now we're at present day, so now we're seeing what's happening. And at this point, I would just watch it because right now, stochastics is in the middle, and there's nothing really happening at this time. Excuse me, I'm really gassy right now. I'm just keep burping. Anyways, let me see if I can take you through quickly through another one. Looks like the Euro USD is moving quite well, so let's take you through this one very quickly. Excuse me, I really coughed on you guys that time, huh? Let me just get rid of these lines here. Alright, so this is the point in time. You're just watching to see what happens at this point, and we're just going to put support here. We're going to move this. We're going to look for a high. We're going to see bounces and stuff. Now, at these points right here, I mean, if you're a little risky and you're a little bored, then if you find it bounce up a couple of times and you see it come down and then you think it's going to, just take a 5-minute trade to see how it goes. Don't only do it for like 25 bucks or whatever, or less than that, to see how it goes. You might win. Like over here, see the price bounced off a place. Actually, this is in the wrong place. It closed here and it bounced off. So right when it closed here and the wick, you know that this might be a green candle. So if it's a green, if you think it's going to be a green candle here, then you place a 5-minute call trade, and you would have been in the money. Same thing here. Closed here, it closed very close to this line here. In fact, right on top of it, had a long wick, and it had okay, how about this? I'm not making this stuff up, by the way. This is wording that I've never used before. This is the first time I've used this wording, but this is my mentality and my psyche when I'm going into these kind of trades. 5-minute versus 15 or 30-minute trades. If it is closing, if it's not a big move, if it's not big jumps, big bounces back and forth, but I see that it has bounced off that line before, then it's likely that maybe the trend might not reverse, but the next candle will be a reversed candle. And that candle is a 5-minute candle. You can take a 5-minute trade. Alright? So when you see it close close to that support, stochastic doesn't match up, it's very close to 20, but it's not under 20. You know that the next candle is going to be green, then you just take a 5-minute call trade. So anyways, we're looking for what happens here. So let's just see creating, oh sorry. This is the highest of that day so far, so I forgot to put it, and I'm putting that here. This is that high day right here. So I'll put it right here. And now you're waiting to see its behavior around this, and you're watching the stochastics as well. See? And it completely broke. See, it didn't close close to or under that resistance. It closed over that resistance. Now, although it may come down still, you're trying to play it safe and not doing anything. And as you can see, it did come down. So now you're using this as the new point of resistance. Okay? And now you're trying to see where the new support is. Now, I think it might be right here. So basically right when the trend ended. So this was kind of where it was ranging at. As you can see, it came up here, broke it a little bit, but it came down, and it came up here, went down, and then right when it touched this was kind of rebounding off, and it broke that. So I think that's where probably where, and it was, see, that's probably where the new point of resistance support is. So I wouldn't have taken this trade, however, because I don't know that for a fact. But now that we're establishing support, we could probably take a trade in the future. So now it looks like it's just ranging. Long wick there. And see, again, another example of that support hitting. Actually, I probably should put this here. That support hitting and another green candle happening. I wouldn't have taken any trades here because the candles don't work for me. There's no long wick to the downside or anything like that. So I wouldn't have taken any trades here. However, I'm looking at opportunities here now. Okay, so let's see what the next candle. Oops. This next candle looks like. So see, stochastic matched up, resistance levels matched up, but there's no wick. There's no evidence in the candles that there's going to be a reversal. So it did reverse here, but you wouldn't have wanted to take this trade because there's no solid proof that there might be a good reversal in terms of candle. But you do have a new high, so you're going to use that. Okay, so let's see what happens now. See, it bounces off this right here and then goes back up. You could have taken a 5-minute a call option, and you would have been in the money over there. If you had taken this support, this long candle here, and you would have won that if you're taking a 5-minute or 15-minute. And then it eventually breaks that line right there and goes back up. Okay. So if you're taking exclusively 15-minute trades, all the trades that you see right here, right now, would have won. That we said that you would have won. So let's put this as a new support here. Get rid of this line right here. Okay, and then now let's see what is behavior like in the resistance area. So it breaks that resistance and it's creating a new high. So, but notice this long candle right here. So it's a good chance that it might reverse again soon. But remember, we don't have an established area of resistance here unless we can find one here. No, we don't. I don't know. Maybe this one right here. This was an old support here. Maybe this could be the reversal area. Oops, I don't know what I did. Okay, so I don't know, where was I? Totally forgot. Anyways, so right now you're looking for places. I think this was this it? No. Yeah, I do not remember where I was. I think I may have been here. But anyways, you haven't established any resistance. So you're not taking trades. You're waiting to see what happens with this trend. Now, another exciting thing I have for you guys is another lesson on how to use Fibonacci. And this course, this Fibonacci lesson is gonna just blow your shit away. You're gonna be like, oh my god, I can't believe this is happening right now. And when I show you guys that, you'll be able to trade trends. Okay? Right now, you don't know when this breaks, unless there was a high over here somewhere where you can see it that it could bounce off of. You don't know when that's gonna bounce off. And if it bounces off, where you can place a trade with the trend. I'm going to teach you how to identify how to trade with the trend and when to trade it using Fibonacci. And that's going to be the cherry on the topping, guys. You guys are going to love it. You guys are going to be like, what? Anyways, I'm going crazy. Again, you're not doing anything. You're trying to establish support and resistance. So it keeps going up, keeps going up. You're doing more resistance here. And it keeps going up, okay. It looks like it's leveling off here now, okay. And you're trying to look for a new support. Now it looks like this might be a good area of support so far because it came down. You had a nice big enough candle to go back up, and it came down, created another wick, but it shot past down that way, and created another. It bounced off this old support right here. Now, you could have taken this trade. 2 out of 3 conditions are being met. Your stochastics is under 20. It's hitting a low level of support. Only thing is, there's no big wick. Okay, so it's a purely subjective judgment call on your part whether you want to take this trade or not. Okay, and then you're trying to establish a new range support and resistance. So here is another support and resistance right here. And so you're going to watch the behavior. See now here, this is where it bounced off completely. So this is a very strong area of support. You can take 5-minute trades here. You can take 15-minute trades here. You can take any type of trades, and you'd be in the money. But remember, if it doesn't close close to this line here, then if you're very strict in your rules, you wouldn't take any trades here, right? And as you can see, it broke that line completely and created another resistance level right here. And you're watching to see what happens with the new level of support and resistance. So as you can see, it came down here, creating new support, and creating a new resistance here. Just keeps doing that over and over again. New support here. And then we're back in real time to see what happens. Now, hope you guys like this lesson. I think I've covered everything I wanted to cover in respect to the stochastic. Very, very key indicator for me in my trading. I don't use the stochastics to place trades. I use price action to place trades. I use stochastics to confirm my trade, whether I should take that trade or not. So, 3 rules so far that we went through was, how does the candle look with respect to its wick? Now let me take you through a couple of wick examples. Now, this came down here. Okay, let me take all these drawings out. See, this was an old area of support. Now, you don't know what's happening at this point in time. When you're at this point in time, you don't know what's happening. However, when you reach this candle right here and you have a long wick, okay, and you have a red reversal candle that's larger than that green candle, then you have a good chance that this will win the trade. On top of that, your stochastics is above 80. Okay? So when that happens, you have a strong chance of that being in the money, and which it was. So let's look for another one here. Actually, we'll take that because this shrunk. We'll take this one right here. See, you have a long green candle, but a long wick as well. Okay, so you have a chance that the next candle, the next few candles, will start doing its reversal, and you can make your judgment based on that. Same with this right here. This had a long wick. You could have taken a 5-minute or 15-minute trade, and you would have been in the money. Again, right here, you're going up. You have a huge wick candle right here, and you can take a trade. Your stochastics is over 80. It's just you don't know whether this is a support or resistance yet. So that's the only thing. Let me see. Let me draw a line there and see if it matches up. 33,901. 33,901 was it was a stupid point of resistance. But regardless, if you weren't waiting for your resistance line, then you could have taken that trade based on just the wick and the stochastic, and you would have been purely in the money right there. So remember, reversals have a lot to do with your candles, how they look. All right, so base it on your rules. Make rules and base it on it, because remember, you can't make a consistent income if you're just being subjective with all of your trades. If you follow rules and you see that your rules are making you a consistent profit at least 70 to 85% of the time, then you can make a consistent income. So here again, a long wick candle right here and it reversed. Again right here, a long wick candle right here and it reversed. Okay, these wicks are very, very important. And especially when those wicks are close to levels of support and resistance, it becomes even more close. So let's look for another one right here. So look at this. Look at this right here. You could have taken a 5-minute, 15-minute, 30-minute, whatever it was, and you would have won. It came down here, long wick, and it closed. Okay. Continuing on here. Now, let me take you through an example of a loss, even with all of the conditions being met. Like here, right here. Okay, at this point in time, before this red candle here, let's just say it was only these two. These two are still big, relatively large wicks. And it's under the stochastic, and it's a level of small resistance, which is a new support in the future. If you had taken a 5-minute trade here to the upside, you would have lost because you didn't know what's happening here. But then at this point that you would have lost, you would have noticed that, okay, this candle is bigger. It's more. It has a bigger wick. Maybe I'll take another trade here. So remember, take another trade if you have to. If you lose here, you're not going to win everything, and your rules will not be 100% all the time. You will lose, and in this case, you would have lost. And if you lost, look at the next candle. See what it says. And it's talking to you. And when it talks to you, see what it's saying. It's saying that I've been trying to push it down, but it looks like the bulls are winning it out. That's why the candles. That's why the wick is there, especially when you have a wick in the previous candle as well. It looks like the wick is there, and then that means the bulls might be taking control, and which they did. Okay, and it just continued going up and up and up and up. Another example. Here, another large wick right here. Another large wick right here. You could take in a 5-minute trade, 15-minute trade, whatever it was. Large wick right here. Large wick right here. Large wick right here. Now, if you notice, go back into your chart and look at all the patterns, all right? Look at the large wicks, and what do they tell you? Does the next candle always show red? Does the next 3 candles always show red or green when these reversals occur? Now, as you can see, most of the time, the candle after the long wick is usually the opposite color. So, for example, but it depends on, if you're, it gets a little confusing because if you're looking at a green candle at the bullish area, okay, green candle during a bullish area, meaning a point of resistance, which is right here, okay, and has a long wick. If it is a green candle, the next one could be a red candle. But if the red candle is in a bullish area, and if it's a red candle, if this candle right here was a red one, it already went down. Okay, so you wouldn't want to take that kind of trade. You want to take a trade that will likely go down. If this long wick candle was a red one, again I repeat, if this long green candle right here with a long wick was actually red, then you wouldn't have taken a put option there, because there might be a chance that the next candle will be green. Okay, so you want to do the exact opposite. So see here, it came down, this was a green, and went up a little bit, just a little bit. If it was a bigger candle green, I wouldn't have taken that trade, because it could be coming down again to that point of resist or support. But this is a small candle, and you could have taken that next candle, the 5-minute candle, up as $100, whatever it is, and you would have won that trade. Anyways, I think you guys get the point. Go back into your chart, study this like it's, you know, your science exam or whatever it is that you do, and practice, practice, practice. Don't trade during times of small candles. It's very risky. Trade in times where the candles are nice and big and a lot of volume is happening and a lot of stuff will happen. And always notice the patterns and behaviors the candles are telling you. It's all about candles, all about price action. Indicators will only get you so far. Don't necessarily listen and take everything you hear on Facebook from so-called gurus with a grain of salt, because they don't necessarily know what they're talking about. All these guys are marketers primarily and traders second. I've been doing this for a while. I'm doing this for free, and you have nothing to lose by listening to me. And if you don't want to listen to me, that's fine. But go back into the chart and look for yourself. You will never find a 100% strategy. It doesn't exist. But you will find high probable strategies like you see here. Anyways, hope you guys enjoyed. And please comment on this video, like it. Don't share it because it's private. Only people that I allow in my Google Plus account are able to see this, so don't even try to share it because you won't be able to. One day I'll give it up for free. But right now, I want to trade this group of individuals. You guys are awesome, but you have to start posting screenshots, find your mistakes, post those screenshots, and get help from the group, including myself. We will help you, and that's what this is all about. Anyways, take care and have a great day.